This is the brief on continuous transaction controls and the end of the tax compliance calendar. Global authorities are completely ditching periodic filings for real-time validation. Why does this obscure shift matter to you? Well, getting it wrong doesn't just mean a late fee anymore. It means your business is literally stopped from issuing an invoice. First, tax teams got a shift from downstream reviewers to upstream architects. You used to fix data in your ERP, your core financial system, right before filing. But now, governments validate invoices the exact moment they're issued. One error halts your entire business. You absolutely must co-design the ERP upfront. It's like the difference between proofreading a paper after it's graded versus building a spell checker that physically prevents typos. Second, you might be thinking, can't we just wait this mandate out? No way. This is irreversible because of a massive VAT gap. The EU alone loses over $100 billion annually in uncollected value-added tax. Traditional audits are just way too slow. By hardwiring compliance right into the system architecture, governments make non-compliant transactions impossible. It works so well, they are never going back. Finally, this actually creates a hidden strategic data goldmine. Real-time compliance forces your company to generate a perfect digital record of every financial event. Savvy leaders use this for real-time supply chain and cash flow visibility. It's kind of like being forced to install a security camera only to realize it gives you perfect customer analytics. The tax function that excels only at filing returns is prepared for a world that is already ended. The future belongs to those who govern the architecture.